Audit Committee Chair. Audit Committee Chair.
Good afternoon, everyone. Welcome to the Audit Committee meeting. I would like to begin, since I have nothing clever to say, with a request for approval of the minutes, unless somebody has comments or changes that they would like to make. Can someone...
motion.
Thank you, Mr. Johnson. Is there a second?
Am I? Yeah.
Second. Beryl is second.
Okay.
Beryl seconded. All in favor? Aye.
Aye.
Any opposed? Hearing none, the minutes are approved. Now I will turn it over to Kim to talk about the DASNY basic financial statements.
Thank you, John. Good afternoon, everyone. Before we go into the details, just a quick summary of the highlights of this year's audit results. KPMG is expecting to issue unmodified opinions on DASNY's financials, the supplementary information that goes along with the financials, as well as DASNY's compliance with the state comptroller's investment guidelines, in addition to DASNY's internal investment policies and guidelines. KPMG didn't identify any significant deficiencies or material weaknesses in our internal control, and therefore they won't be issuing a management letter. If we look at the materials that you received last week, behind tab 1, I've included the annual memo that I send out to you that just summarizes the information that has been provided. Unless there are any questions on that memo, I'll turn things over to KPMG for their required communications.
Thank you, Kim. So today we have our presentation of our audit results. We're going to go through our audit team, the scope of our deliverables, as Kim had summarized, responsibilities, summary of our results, our consideration of fraud as we go through our audit, the involvement of specialists, if there is any remaining audit items, which there's only one, your approval, and then any upcoming audit pronouncements, and then we have some areas of focus in our appendices for additional information if you would like. So moving to slide 5, I am Marie Zimmerman. I am the lead engagement partner for the period under audit. With me today is Jeff Coach, and in New York City is our partners Benny Hadna and Layla. Our team was consistent with the team that we had presented back in October, of which all are returning members. With that, Benny, do you want to take us through some of the items on slide 5?
Thank you, Marie, and good evening to the Audit Committee. Again, it's always a pleasure here, and I have one of your colleagues who we like to sit together each year down here. So
We love New York.
Yeah, we love New York. We good friends. So I just as you know, this is the 9th year of the arrangement, and as it has been an overall success. We continue to have one team. We work side by side, collaboration on all phases of audit, which include planning, control, evaluation, substantive testing, and completion. This year we had 5 Watch and Ride team members at all levels of experience, and we contributed approximately 30% of the total engagement work. We participated as it relates to the risk assessment and planning discussions. We assisted in the preparation of the confirmations, and also we did participate during the testing. We participated in such sessions as the cash and investment, which involved Gatsby 34, 40, and 72, and the test work. We looked at leases and loan receivables, debt and bonds and note outstanding. And Layla participated as related to reviewing the work papers of our staff, and I think the engagement as a whole. So again, we're pleased to work with KPMG. We didn't experience no issues, and as far as I'm concerned, we had a very good engagement working together again this year. And we appreciate DASNY for your participation and cooperation to make this happen too as well. Thank you.
Thank you, Benny. Starting on slide 7, I just wanted to communicate that we did have no change in the scope of our audit since our October presentation. As Committe laid out, we did have 5 deliverables. And we did issue an unmodified or clean opinion. As it relates to the supplementary information, we will be issuing an in relation to opinion. And then in addition to the report over investments in accordance with the comptroller codes, we also will be issuing our audits required communication letter, as well as our internal controls over financial reporting and compliance and other matters performed in accordance with governmentally and audit standards letter. That is noted in tab 3 of your binder. Moving to slide 9, management's responsibility was for making all financial records and information available to us. We want to thank management for working with us again this year. We worked extremely smoothly, and management was available at all times for any questions we had or providing any information that we requested. One item to also note is that the audit of the financial statements does not relieve management or the audit committee of their responsibilities. And we have summarized the responsibilities of management and the audit committee here on the slide. KPMG's responsibilities are consistent with that we communicated in our planning, where we conducted the audit in accordance with professional auditing standards. Those are AICPA as well as GAS. We did plan our audit and to perform reasonable but not absolute assurance about whether the financial statements are free of material misstatement, whether caused by error or fraud, and we did not identify any fraud or illegal events or errors that were caused by fraud or misappropriations by management. In reviewing the other information that was covered in the financial statements, we did look at any other information and ensure that it was consistent with the information in the basic financial statements. With that, I'll turn it over to Jeff to provide a summary of our audit results.
Sure, thanks, Marie. So we're now on page 11 of the report. So starting with the basic financial statements, as we've alluded to before, there have been no deviations from our audit plan that was presented on October 10th. We will be issuing an unmodified opinion on the basic financial statements. That is basically a clean opinion. We didn't have any matters, no emphasis. There were no new Gatsby pronouncements that impacted the financials this year. DASNY's accounting policies are described in Note 2 to your financial statements and are generally consistent with those in the prior year. We've had discussions with management about the quality of those, and we noted them to be appropriate and in conforming with accounting policies and procedures out there. With regards to various transactions we looked at, we noted that there were no transactions that were deemed both significant, unusual, or that lacked authoritative guidance. We evaluated various judgments of managements and assumptions, specifically related to the accounting estimates. The four main areas we looked at were the OPEB liability, the net pension liability, interest rate valuations for the swaps, and the valuation of your leases and loans receivable. Based on our review of those, we did not note any factors that we would consider to be management bias, and in fact, the determinations of management were what we would consider neutral, which is where you'd like to see related to those matters. So we were in agreement with the assumptions utilized and the valuations derived for those various estimates. During our audit, we did identify 4 misstatements which management reviewed and ultimately corrected in the financial statements presented to you. When we identified those matters, we reviewed them to determine what type of level of deficiencies and controls may exist. And based on our review, we did not consider any control deficiencies noted to be at the level of significant deficiency or material weakness. And that overall, the process management does have in place for the presentation of these financial statements is very sound. In addition, there were no proposed uncorrected misstatements. So anything that we did bring to management's attention that was significant, they did ultimately correct in your financial statements. We are not aware of any consultations that management had with other accountants regarding current year transactions. There were no major issues we discussed with management that were the result of the conditions of this engagement. We had no disagreements on any matters with management. There were no significant difficulties that we encountered in performing our audit. We do have significant written communications with management. Those include the engagement letter and the management representation letter, so we have no issues there. On the right column, we have 3 other reports we have identified that Kim has alluded to before: the report on supplementary information, the report on investment compliance, and the Yellow Book report, which is the internal control letter. All those will be unmodified matters. With regards to the yellow book, it'll note that there are no material weaknesses or significant deficiencies in the internal controls that we evaluated as part of our risk assessment and audit procedures we performed. Because, as we noted before, that there were only control deficiencies and not anything that amounted to a significant deficiency or material weakness, we will not be issuing a management letter. And we also wanted to inform you that as of today and throughout the audit, KPMG and BCA Watson Rice have remained independent from DASNY throughout the audit. With that, I'm going to turn it over to Layla, who will go through some of our considerations of fraud.
On slide 13, we do consider fraud in all of our audit procedures as required by the professional standards. We perform a fraud risk assessment to identify what fraud risks may exist over DASNY's organizations, particularly management override of controls. We made inquiries of certain members of the management, internal audit, and others within DASNY about fraud and their knowledge of any occurrence or any non-compliance they may or may have been aware of, and no manner have been brought to our attention. In response to the fraud risk associated with management override of controls, we did test manual journal entries in connection with substantive audit work, as well as any post-closing adjustments that would have been made to the financial statements. We also looked at the significant accounts of cash, investments, and bonds and notes outstanding, and we confirmed 100% of those balances and had no issues on those. We also reviewed any significant accounting estimates for indications of management biases. We also updated our understanding of DASNY's ethics and accountability program. And during all these procedures, no instances of fraud were identified. Okay, on slide 15, it's I think it's Jeff.
Yep. No, thank you. On the next slide, on slide 15, we'll review the involvement of our specialists in open items. So with regards to specialists, and consistent with prior years, we had 5 different groups of specialists involved on the DASNY audit this year. The first being our Information Risk Management, or IT team. They evaluate the systems that are financially significant, those being JD Edwards and SunGard. They test the general IT control environment to give us a basis for reliance on the IT application controls that DASNY utilizes in the preparation of their financial statements. We also involved a tax specialist who does review DASNY's tax-exempt status as a governmental entity on an annual basis, and there were no exceptions noted there. With regard to the OPEB liability, we do involve an actuarial specialist. We know DASNY does have their independent actuary that does prepare their analysis. We utilize a secondary firm actuary specialist to review the work of the actuary as well as the assumption of management. And we noted that those assumptions and method utilized were appropriate and reasonable given the circumstances. In valuation specialists, we involved our investment pricing desk to verify the valuation of 100% of your marketable securities, and that amounts to about 99% of DASNY securities. So we utilized our specialists who utilize independent sources outside of what DASNY normally uses. DASNY uses an IDC. These specialists use different pricing sources such as Bloomberg and other to kind of benchmark and make sure that the prices from all the various parties are reasonable and consistent across the board. And the final specialist we have is our Engagement Quality Control Review Partner, who is our secondary partner. They're involved in planning discussions as well as reviewing significant accounting areas, as well as reviewing DASNY's financial statements, kind of as a secondary check to make sure that all the appropriate disclosures and items are properly disclosed within the DASNY financial statements. With regards to the remaining audit items, we do have now the representation of management, so we will be okay with that matter. Over the summer, we will be issuing the independent auditor's report on the 32 individual DASNY financial statements. And then when DASNY's annual report is ready, we will review that in relation to any of the basic financial statement information that may be included in that document. With that, I'll turn it over to Marie on
Silly question, I think, but the actuaries that you all employ, well, I'm sorry, you don't employ them, I should contract with them to review the work of the actuaries, DASNY's actuaries, in determining the OPEB obligation and cost. Do your actuaries review the numbers, or do they review and evaluate the method and assumption of?
And that was a little bit of a misspoke by Jeff's behalf. We do have those actuaries in-house. So
Okay.
they are hired. And we actually did change our actuary that we utilized this year because we had been utilizing the same person for quite a long time. So before, to just give it a fresh look on our side, we actually did change this year to a different one of our professionals in-house. They do look at the assumptions and the methodology. So as our actuaries are going through, they're specializing in that, and they're actually going through those assumptions and doing their own kind of recalculation, and they come up with a range based upon what assumptions we may believe. So if there's different mortality tables, or when you're looking at the expected rate of returns, they challenge those. They challenge the discount rate and say, okay, well, what if it was 1 point higher, 1 point less? Or we believe that these mortality tables, there's been an update to it, we're going to use the updated one and then develop a range. If your actuary was in the range, then we're pretty comfortable. If there was a difference, we go back to management and say, hey, have you guys considered these other assumptions? Why would they not be appropriate? Maybe they are more appropriate, maybe they're not. So we really kind of do our own.
No, that answers my question. Thank you very much.
But given the fact that the pension plan is a state plan, and would probably represent less than a percent of the state plan, what purpose is it? Are we really auditing what the controller's office does?
So it's not for the pension plan, it's actually for the OPEB.
Okay.
So the other post-retirement benefits, because to your point, the pension plan for you guys is not that significant.
Right. Yeah.
So we don't go through that level of effort for this
Just not.
engagement.
Just for benefits. And that is
Yeah,
a significant number.
that's a big number.
I'm sorry for interrupting.
No, that's a great question.
Well,
Yeah,
then,
anything
go ahead and
else?
ask the question on another subject. I assume that you also, in your examination, you check to make sure that the collateral levels that we hold are appropriate collateral. We meet the legal standard.
Yeah, no, so that does tie into both this audit as well as your compliance with the Part 201.3 of the Title II. So that is one of the procedures we do perform when we look at the types of the collaterals on the investment agreements and validating that the collateral is appropriate and at the right levels at various points throughout the year.
Good. Thanks, Jeff.
You're welcome.
So segueing into OPEB for next year, Gatsby 75 will be applicable. Currently, under Gatsby 45, you are recognizing your pay-as-you-go. Your current liability is around $138 million. With next year, when you bring on implementing Gatsby 75, it'll be accrual methodology consistent with how you just brought on net pension liability in your books. You'll be recognizing any deferred inflow or outflows as it relates to the OPEB. And as you can see in the footnotes, currently the actuarially accrued liability is around $252 million. Now that would be subject to change. That's not to assume that that's what's going to be coming on your books because of the changes of the assumptions. However, you can get that sense that management will be going through that analysis in the coming year. One thing a little bit different to your point, John, that OPEB is that DASNY is technically a single employer because NICESHIP is just an administrator to help give you more benefits of your insurance. So as Gatsby will be looking through your analysis utilizing your actuary, we will again continue to have our actuaries evolve and evaluate those for the coming year.
So 75 actually requires that you do a fair amount more work than you did before, under 45.
Well, the assumptions, we'll still be looking at all the assumptions and requiring, but in terms of what the level of effort that management's going to be doing, yes, there'll be a little bit more work to it, yes. Consistent with net pension liability. And then with our audit procedures, it'll have that as well, yeah. The other item that I wanted to highlight that's coming down the road for March 31st, 2019 is Gatsby 86. And this relates to certain debt extinguishment, specifically the in-substance defeasements. So Gatsby was clarifying when you have in-substance defeasements, whether it's utilized with current economic resources or if it's a refunding, they are disaggregating that when you have those two different nuances, they're clarifying the accounting purposes for that. In addition, they have a certain criteria that in substance defeasance, as it is now, has to be, the money that is set aside has to be put into a trust or an escrow, and currently has to be in essentially risk-free investments. One of those investments that DASNY utilizes is slugs, or state and local governments. Well, when Gatsby 86 comes into play for you next year, one of the paragraphs from Gatsby 7 that they picked up was defining what is essentially risk-free investments. They removed slugs from that definition. So yesterday, KPMG consulted with Gatsby to say, was there a reason why you would have removed slugs from that definition? Do you believe it's no longer essentially risk-free? Because we have a client that invests in them. And the response was, we didn't think it was a common practice to invest in them, so it wouldn't be a good example. But we do feel that it is still considered an essentially risk-free. So as long as your client concludes that they're comfortable with that, there would be no change in that accounting.
So even though they removed SLGs from the definition, we're allowed to do it anyway.
You're still allowed to do it.
They're still they just took them out. They're still risk-free.
They're still risk-free. So I think the comment was, it's not common practice to invest in those. Okay. But the good news is it's still essentially risk-free, and because if you were to invest in investments that aren't essentially risk-free, that you lose that in substance defeasance, and you would actually bring the debt back on the books.
So how do you cover that? Do you ask the Gatsby people to send you a note that you've had the conversation, or do you simply, fill the file with notes about the conversation, contemporaneous notes?
We would actually document the conversation. I mean, so what we did is in Gatsby 86, there is a section of a question of we removed it. It's down in B8, paragraph B8, and it says that we removed it because a lot of people, we didn't feel like it was a good example. So we wanted clarification. Can we look back to Gatsby 7, paragraph 4, to say that it still meets that definition? Can we point to that? And they said, yeah, you could still point to that. So I would just suggest to management, that's what you point to, is that it was there. It wasn't removed because they believe it's not essentially risk-free. They're only giving examples. Right. Okay. So management, of course, could always, or yourselves could always inquire of Gatsby as well, if you wanted something formally written from them. They normally don't give formal written responses.
Why am I not surprised?
That's a suggestion. The other item for that'll be coming down the road is additional disclosures, of course, right? As with most Gatsby pronouncements, there's additional disclosures required. And that would be evaluating those in substance defeasance. If they have the ability to invest in investments that aren't essentially risk-free, you would just have to disclose it. Moving to the next one, Gatsby 87 with leases. One of the items relating to leases is your leases as it relates to leases and loan receivables. So this Gatsby 87 will be required for March 31st, 2020. I want to flip to the next page and then go back to it because Gatsby actually has a current project as it relates to the conduit debt and interpretation number 2. In that project, they're reevaluating the definition of conduit debt. And that would actually be applicable and effective for periods beginning after December 15th, 2020. So it actually would be for Gatsby's year-end 2021. But they say they're encouraging early implementation once the statement gets approved. I note that because in this, it's not even an exposure draft yet, but in the management notes for this project, they discuss conduit debt leases. And they discuss specifically that you wouldn't implement Gatsby 87 for leases as it relates to conduit debt leases. So I think part of the triggering of this current project for the conduit debt was the fact of, hey, you're going to change the definition of the leases. What about leases for the conduit debt? So going back to the current project over the conduit debt, the management is leaning towards in this exposure draft that will be coming out in July, that there's going to be 3 characteristics of the conduit debt. You have the government issuer, you have the third-party borrower, and then the bondholder. it is expected that the issuers would not recognize the liability for the debt that is considered conduit debt. It is also they're clarifying that the third-party borrower cannot be the same entity in your situation. It couldn't be the state. So state debt wouldn't be considered conduit debt because you can't. The borrower and the government issuer couldn't be the same entity. In addition, they go on to discuss that revenue bonds, limited obligations, and limited obligation revenue bonds would not be classified as conduit debt. And then, yeah. Oh, sorry. And then.
No, I do have a question. So
Yeah.
what does that mean? If we've had a lot of discussion about conduit debt. Should conduit debt be included in our financial statements at all?
So when back in 1995, when interpretation number 2 came out, at that point in time, again, my understanding, because talking to my predecessors, was that DASNY felt pretty strongly that we should include the conduit debt because it most represents your portfolio of the level of effort of your business. And at that point in time, you decided to take the approach that you would recognize the conduit debt on your books. To be able to remove that at that point would be a change of assumptions that management's doing. It would trigger accounting implementations. Given that they have the current project on the horizon and it actually would be removing the conduit debt, you won't have that option anymore. If the standard is written as right.
Forced to remove it.
You're going to be forced to remove it at that point in time. So, and because it's not even an exposure draft, we've talked with management, we wouldn't recommend doing anything until this kind of comes out because you wouldn't want to unwind it and then have to put it back, and that level of effort would be pretty challenging.
Why would we put it back?
I'm saying because right now it's only in a current project. So once the exposure draft comes out, there's 90 days for comment periods. Sometimes Gatsby could potentially change. So you don't want to assume that they're going to go down the path even though they've documented their discussions.
But we could make a decision to remove it. I mean, I'm not suggesting we do that now but we could make a decision to remove it.
You could.
Would you recommend that?
It would be very difficult to find a basis that KPMG could opine on, in their opinion. Given the course of this project, if it plays out as we expect it to right now, we would remove it anyway. So there doesn't seem to be any good reason to go through the effort to try to find a reason to convince KPMG when if you wait a couple of years, we're going to be required to take it off of our books, and there will be no effort on our part other than.
Because right now it would be considered a change in accounting, and so you would have to have a permanent reason to make that change.
Okay. So, and when the conduit debt comes out, the PIT bonds, sales tax stays in.
Correct.
So that would really be it. That would be our.
Which is about 60% of your debt now, I think.
And plus, yes, yeah, growing. Yeah.
Okay. Thank you.
So the exposure draft is expected in July, and then the comment period is 90 days. I manage, as you are one of the larger conduit debt issuers, if you do feel strongly in one way or the other, please feel free to comment. I'm sure you could have your opinion heard. Does anyone have any other questions over the future accounting pronouncements impacts?
You're scared. Is that on the record?
Yes.
Good.
We're not scared.
That's our presentation for today. And I don't know if anyone has any other questions for KPMG or.
Could I have a motion? Don't go anywhere.
Yeah.
Could I have a motion to go into executive session to discuss the financial and credit history of a particular corporation?
So
Now, None? All in favor? Aye. We are in executive session. We are not in executive session. Close to being in executive session. We are now out of executive session. What is the standard line?
No decisions.
No decisions were made in executive session other than to come out of executive session. And now can I turn it over to Kim again for the annual investment report.
Thank you, John. Before I move to the investment report, I just want to give you a few highlights on the financial statements. If you look at page 5 in the financial statements behind tab 2, a few points in the executive summary. We did have another strong year on the debt issuance side, issuing over $8.5 billion of debt. That was almost $2 billion over the prior year. Construction business also expanding. We're working with the Department of Health and the Empire State Development Corp on a new life sciences public health laboratory. That's a $750 million project. Continuing work on permitting for Moynihan Station, Javits Convention Center, and continuing our work with NYCHA. When we look at our financials, in the basic financials, you see we did have a loss this year of $3.8 million, and that was primarily the result of our Atlantic Avenue subsidiary. We have an annual charge for depreciation, and we paid some debt service for which we received the proceeds in the prior year, and so you see a bit of a deficit there in the current year. Looking at our debt issuances on pages 8 through 10, we, as I said, issued over $8.5 billion of debt during the year. Most of that, over 85%, came from refundings and new money, and half of that from our public clients. Our public clients continue to be the primary source on the customer distribution perspective, with 83% of the issuance versus last year's 55%. So it was a very high year for them. In terms of retirements, pages 10 through 12, we had $6 billion in retirements for the year, and nearly half of that was coming from bonds that were refunded by new DASNY bonds. Another 40% from scheduled redemptions. There too, and as Marie had alluded to earlier, we see the preponderance of that on the public side of our business. We ended the year with $50 billion in outstanding bonds. That was an increase of over $2.5 billion from 2017. We did see a smaller shift, but still a shift upward on the public client side, with 71% of the total outstanding being with our public clients. Moving to pages 15 and 16, our construction management business increased $1.2 billion last year. That was primarily our certified disbursements and really reimbursements to our clients. That was over 80% of the increase, with an additional $940 million in disbursements for the year, and the DASNY managed projects increased approximately $225 million. There too, on the client distribution side, the public clients, they increased from 74% to 86%. They had $1.4 billion of increase, primarily on the reimbursement side. And we also saw a reduction in disbursements to our private clients. Moving to page 17, our net position remained relatively stable in 2018 as it did in 17. On page 18, we see our investment balance. That grew by $1.2 billion up to $4.8 billion, and the majority of that relates to funds that are invested for construction projects and grant programs that are financed by DASNY issued bonds. The supplemental information is included in tab 4 that provides our budget and actual expenditures for DASNY's operations, schedule of outstanding bonds and notes, and schedules of our financial statements that are broken out between our public and private clients. We will tomorrow, before the board, have a resolution for the board to approve adoption of the basic financial statements for the year ended March 31st, 2018. Are there any questions before we move on to the investments report?
Do we have to recommend? We have to vote to recommend?
Yes, we do. Should we do that now, or should we do it all?
You can do it either way.
Could I have a motion
So moved.
to recommend?
To recommend.
John or Beryl? Beryl seconds. All in favor?
Aye.
Any opposed? The motion carries. Resolution carries. Good.
Thank
Okay.
you. The investments report is included in tab 8. The report includes our investment guidelines as well as summaries of our investment income earned and fees paid during the year. When we file that with the Office of the State Comptroller, we will also include a copy of DASNY's financials along with that report as required. We did not make any changes to the investment guidelines during the course of the year. We had investment income of over $40 million, most of that coming from non-construction funds. The construction funds were $7.6 million of those earnings. And we paid approximately $755,000 for trustee and custodial services. Are there any questions on the investments report?
Shall we approve that as well?
Sure.
Could I have a motion to approve the investments report? John?
Second.
Al, second. All in favor? Aye. Any opposed? Resolution is approved. Thank you.
Okay. Before we move on from there, I do just want to thank the folks that made this all possible for me. Certainly the statements come across looking beautiful and very straightforward and easy, but behind the scenes it's very complicated. It's a voluminous amount of data, and I rely really on the experience, the knowledge, the dedication of the finance staff. A small portion of which is present here today. They maintain the books and records. They make sure that the auditors get all the support that they need, answer all of their questions, and make it possible for me to be able to present the results that I did today in the manner that I did with the clean opinions. In particular, I do want to thank our assistant directors, Karen Sider, Accounting and Financial Reporting, Karma Sees, Debt, Kim Ellis, Investments. Not here today, but Heidi Lenge in Accounts Payable, our budget manager, Jeff Arnold, and our deputy CFO, Nick Zarelli. Without their dedication, the support, and oversight of their teams, none of this is possible. I also want to welcome our new additions. Sophie Lai joined us earlier this year as the Director of Financial Management, and Lee Xu joined us as Manager of Accounting and Financial Reporting. And although both of them have only been with us a few months, they both contributed significantly to the audit this year and certainly will be doing so as we start to implement some of these new standards and move into the new year. I'd also like to thank KPMG for their role in making this a very smooth audit. Thank you. I will turn things over to Gerard.
Thank you, Kim, and thank you to all of the team members who have collaborated in advancing this. This is a all-important and very robust activity, so kudos again. Today, I am presenting you with our fiscal year 2017-2018 report to the authority's budget office. I will walk you through the challenges DASNY faces and how we are tackling those challenges, speaking to our accomplishments as reflected in the report. During fiscal year 2017-2018, our Public Finance Division completed 21 bond financings for a total of approximately $8.5 billion. The largest public higher education and healthcare financings included a $1.75 billion state personal income tax transaction, a $678 million transaction for New York University, a $294 million transaction for the Memorial Sloan Kettering Center. They also completed 11 lease transactions with a total value of approximately $148 million under our tax-exempt leasing programs. Construction expenditures on DASNY-managed projects totaled approximately $857 million. We ended the fiscal year with a pipeline of 932 projects valued at almost $6.16 billion. for the fiscal year 2017-2018 saw the delivery of 15 scheduled critical SUNY housing projects by occupancy date, including the complete building renovations of Bevier Hall at SUNY New Paltz and Wilson Hall at SUNY Plattsburgh, as well as the first phase of the Mackenzie Complex at SUNY College of Technology at Alfred. We also progressed the new $24 million SUNY Brockport Design Build Residence Hall project towards a July-August completion. Challenges. In the public finance sector, challenges include competition from other issuers of tax-exempt debt and market conditions. DASNY's business also continues to be impacted by the proliferation of local development corporations issuing tax-exempt debt without having to comply with state oversight procedures applicable to DASNY. In addition, the interest rate spread between taxable and tax-exempt financing has remained relatively compressed, minimizing the impact of the tax exemption. In 2017-18, 13 DASNY bond issues were defeased as private clients continued to refinance their bonds elsewhere. Additionally, during 2017-18, DASNY experienced a decrease in private client transactions. In late 2017, DASNY's public finance clients were also faced with the potential changes to the federal tax law, which would have severely limited their ability to access tax-exempt financing. Within the construction sector of DASNY's business, DASNY managed construction expenditures increased to $857 million as compared to $634 million during fiscal year 2016-17, an increase of approximately 35%. The profile of this work, however, continues to shift to a high number of smaller-sized projects. In accomplishments, to address these challenges, DASNY has undertaken a number of key initiatives, namely One DASNY, during fiscal year 2017-2018, to deepen our mission, to improve top-line growth, create efficiencies, and also properly manage risk. In order to meet its clients' needs, this One DASNY initiative is helping us continuously evaluate our processes and procedures to be more nimble and proactive and conduct our business efficiently. As you are aware, in December 2017, DASNY worked hand in hand with its health and higher education partners, accelerating financings to help them meet their needs, as the ability of these not-for-profit institutions to issue low-cost, tax-exempt private activity bonds had been in question as a result of various federal tax reform proposals. We, and I certainly thank you for the extraordinary efforts, 6 meetings in 5 weeks, in helping make those critical client accommodations possible. DASNY also implemented technology and knowledge transfer initiatives to ensure our people have the tools as well as the skills and experience to continue to provide experience our clients need. Now, overall, our metric results for our 2 major businesses are consistent with or slightly better than last year's results. In construction, DASNY delivered 100% of scheduled critical SUNY housing projects, 15 in total, in time for occupancy. Overall, compared to last year, we had a higher percentage of completed projects delivered on time and also a higher percentage of all projects delivered within 3 months of the contracted completion date. Our on-budget metric was met in approximately the same percentage of projects as the prior year. Impacting our results were the significant budget and schedule issues encountered on two major rehabilitation projects DASNY completed in occupied facilities. Both of these projects were initiated prior to the DASNY New York City citywide PLA, and as a result had an added layer of coordination issues resulting from multiple primes under WICS. In the public finance arena, during the 2017-18 period, DASNY delivered 100% of the 12 bond issues closed existing clients within the benchmark time frame metric. DASNY delivered all 4 of the state-supported financings within the calendar and time frames established by the New York State Division of Budget. In the aggregate, for the small number of new clients and the pooled financings, DASNY performed slightly better than in 2016/17. I will also note that the summary of activities and metrics reports for the 2 DASNY subsidiaries are also included under tab 9 as part of the DASNY Annual Public Authorities Report. There has been broad support for our One DASNY initiative among staff. We remain focused on our commitment to continued improvement and providing our clients with the speed, certainty, flexibility that they have come to expect from DASNY. Nevertheless, there is still more work to be done. Together, we will continue to integrate our resources and promote greater collaboration across all departments, making DASNY ready and able to meet the needs of New York State. I look forward to seeing what we accomplish next. Thank you.
Any questions?
Do we have to approve the submission of the ABA?
Yes. Debbie is nodding.
Thank you.
Can I have a motion to approve or recommend to the board the submission of the ABA report?
ABO.
ABO.
Darrell?
Earl, thank you. A second? Al, thank you. All in favor?
Aye.
Any opposed? Hearing none? Carries.
All right.
Thank you. I think we are going to go into a second executive session. Everybody stays except our independent auditors. And,
Will they be coming back
will you be coming back?
after this?
I don't think so.
Then, Mr. Chairman, may I make a comment?
Absolutely.
It's a pleasure to have Marie Zimmerman back as the lead engagement partner on this account. And it's just been terrific to have her here. Jeff, it's good to have you as always. Thank you very much for being here. Your support has meant a great deal to this engagement, and I think you're doing more and more. Appreciate that very much. Benny and Layla, I know you all are way off in New York City, but I want to say to you that it's also a great pleasure to have you in what you pointed out as your 9th year. I didn't realize that as a part of this engagement team. Thank you for the contributions that you are making. The end.
Okay.
Thank
And
you.
we'll see you tomorrow morning.
Okay.
Will you be down there
Thank
or
you.
will you be here?
Now I'll be up there.
Okay. Thank you, Benny.
I'll be up there. I came back here, but I'll be up there tomorrow. I was
Okay.
down in Florida.
Thank you.
Do I need a motion to go into
Better
executive
have somebody.
session? I have a motion, John?
Thank you.
To go into
Executive session to discuss the creditworthiness.
Discuss it. Yes, exactly.
Or is
To
it
discuss the
personnel?
financial and credit history of a particular corporation.
So moved.
John?
Check.
Second. We are in executive session. During executive session. We are out of executive session. No action was taken during executive session other than to come out of executive session. I would like to call for a motion to approve a 1 year or discussion of a 1 year contract extension with KPMG. Al?
So moved.
Beryl? Seconding.
Second.
All in favor? Aye. Any approved? None. Motion carries. Thank you. Could I have a motion to adjourn?
John?
Yes.
I so move.
Huh?
I
Beryl?
move.
Beryl, thanks for staying.
And I'm
See you tomorrow.
moving. I'm also moving.
Thank you.
See you tomorrow.
Thank you. Yeah, I just want to get on my way. Take care.